Okay, what are we talking about? We have been talking about Bird, and Bird has been in the news, right? Bird is a scooter company, and it's those little electric scooters you find around town. Get the Bird app on your phone, and you can go now rent that scooter for wherever you go, drop it off at another corner of town when you get where you're going. You don't have to do anything, just lean it against the side of a building basically, and away you go. There was Bird, there was Lime, there's a whole bunch of them out there, and a lot of times it did nothing but kind of litter the streets as we had parts of these scooters sitting there. You'd see a scooter with the handles all tweaked, or part of it's missing, or it's been basically somebody stole parts off of it. So not always were they all neatly lined up, ready to go. Sometimes they were just a bunch of dead birds laying around, making problems in the city. All of that came to bear. But where did it all start? You got these headlines, the Bird is bankrupt, and $7 million valuation, all this stuff saying doom, gloom, and what's happened. Let's step back in time and find out what happened to the Bird. First of all, where it began. This guy was the guy who was the CEO and founder, Travis van der Zanden. He founded Bird after a 6-month wait. Now, let's go back in time and see what was going on here with the 6-month wait. In Santa Monica, he finds this company. Previously, he was VP of growth at Uber. When he left to be the founder of Bird, he took a little break there of about 6 months before he founded the company. Now, why would he take a break? Aha, we have an answer. Back in 2013, he left Lyft as COO. And at the time he left, he had said to Lyft, you need to make me the CEO or I'm going to leave the company. I'm out. And they're like, well, we're not really good at this ultimatum thing, so maybe you should just leave. So they called this bluff. And apparently then the board, the company, sued him for stealing secrets. He said, that guy's going to walk down the street to Uber after being our COO at Lyft, and he doesn't get to be CEO? Wait a minute, that ain't right. Everybody ends up in court suing each other. Now, how did he get to Lyft? Long ago, he was an entrepreneur and built a company called Cherry, which was a car wash company. So Cherry gets bought by Lyft. He comes in to be COO of Lyft, says he wants to be CEO. They're like, no, dude, don't do it this way. You can't threaten us. And then he says, the hell with you. I will leave and I will go be the growth of the bigger company, Uber. So next time he leaves, he waits 6 months, waits for the smoke to clear, and is the founder of Bird. So basically, we see that this guy's been around. All of my being kind of silly with this aside, this is a guy who has a lot of experience in vehicles, transportation, new app, and the new markets. And now it's the human transportation, little electric scooters for you and me, scooting around town. Pick it up, drop it off, right there in the app, credit card in the app, you pay for it. So that's where it began. The product is these. You recognize them. I'm talking about scooters, and they're not that heavy, because there's some sort of a Gen Z there demonstrating how easy it is to pick up a Bird. So 2018, the scooter company says this is our first scooter, but it only lasts about 10 months. So from there, the product went to the Bird platform, where you could maybe have your own fleet of scooters. We'll talk about that in a minute. You also had to charge them, you had to repair them, and sometimes you had to find them because they went missing. 2019, Bird won, and it said that the life was about 1 year plus. And when I say life of it, you have to think about how many places it's running around town and recharging, charging, going over bumps, being dropped, left over. So they're talking about the life of the scooter before it either has to be replaced or really overhauled. That's what we're talking about. Then they get to the Bird Cruiser, which was a bike moped. They were bright blue color. You may have seen some of those. Then in August of 19, the Bird 2 scooter, which had 50% more battery range. You see, just like an iPhone, they thought of the scooters just like products and kept making them better, adding more features. 2021, Bird Bikes, which kind of goes with the Cruiser. And finally, here is the Bird Bike down there, and there is the evolution of it. So you see, they ran the company and they built these scooters like a product line, going from Bird 1 to Bird 2, Bird 3, and take a look. They kept adding to it in terms of 12 to 14 to 18 to 24 months of rental life. So 24-month rental life, that's pretty good when the first one was only 12 months. Means whatever you pay for that one, it's out there on the street for about 24 months before it's just so worn out and it gets tossed away or recycled or whatever, hopefully recycled. But nonetheless, that's how they manage it as a product line. So now let's see what supported them, because they raised $916 million between debt and venture equity. But take a look at what they raised, and there's a very interesting thing, because if you know what a unicorn is, a $1 billion valued company, that's right, correct? We'll see how quickly they got there. So in 2017, he's come over from Uber, he waited a few months, and he finds the company, and he gets some seed capital, probably out of his pocket, and a few friends and family there. Then, that's June. October, he gets the company going, says, this is what I'm doing, this is what's going on. He gets 12 people that he knows together in Silicon Valley, $15 million Series A. And then in 2018, a year later, he does a Series B and a Series C. $100 million. Look at October, November, December, January, February, March. $100 million raised Series B from Valor and Index. And then in June, $158 million Series C from Sequoia, Excel, Charles River Venture, and Greycroft, and 18 total friends. And this Series C was the fastest company to a $1 billion valuation, June of 2018 after being founded. So that's like under 2 years. Wham, bam, look at that. They're not done. 2019, $2.5 billion valuation. $2 billion of that was in January they had achieved. And they did a Series D of $275 million with, from Sequoia, CPDQ, and a couple others. And finally, they had that $2 billion valuation in April. And then in January, Series D, plus 75, so that made it $350 million. So you can see what happened. 3 years, boom. And then they make an acquisition, 2020, acquired Cirque, and had 300 employees in 43 cities in 12 countries. Wow. So that is how they raise the money. That's a lot of money to be raising to do this. So something happened here, and this got a little bit of press. This is called the founder sell-in. Now, you saw on the last page how rapidly people were investing. So there was probably a lot of investors, a lot of venture capitalists that didn't get into the round because the round was full. But they really want to be part of scooters. And Bird is a guy that was at Lyft and Uber. It's a great story. And they're got that product line of scooters, appear to be out there running. Profitability would come later. Nobody's worried about that. They're worried about getting a footprint out there, getting those cities launched. Okay, when that happens, founder can usually sell in. Why? Here's why. You've raised $450 million in private rounds, and the CEO sold in a rumored $100 million or more. How does he do that? He says, well, look, there's no room for you in the round, but if some of you want to buy some from me because I'm the founder and I own like 60% of the company, be my guest. So certain investors will say, tell you what, I'll buy $100 million from you for your shares. Now I'm in the company because there wasn't any room in the current investment. You follow that? No, we're only raising $158 million or $275 million. We have what we need. We're not raising any more. You have to wait till next time. I don't want to wait till next time. I want to invest now. And he says, wait a minute, maybe I'll sell you some. So this happens more than you think, but a founder selling in $100 million, I, as an investor, would be worried that that founder maybe would be a little bit distracted because I want him to be driving for the ultimate payoff that we're all driving for. Nonetheless, in a frothy market where things get exciting, you could have sell-in where there are outside investors willing to put that kind of money into the pocket of a founder, knowing full well that now he or she's flush with cash and maybe he isn't going to be as focused as they were a minute ago. You got to be convinced that they're just going to take the money, take some off the table, as they say, and now everybody else is there driving forward. You got to believe that's going to be happening. So what does he do? He buys homes. November, $8 million Santa Monica mansion that he would sell for $9 million 3 years later. Oh no, now he doesn't have a house. What does he buy? Check this out. $22 million Bel Air mansion. He bought it from Trevor Noah, right? And then he got tired of that. He listed it for $25 million in April 2021, dropped it back down to 19, less than what he sold it for, and then all the way May 2023, and currently hasn't sold yet. So he still owns that. Where does he live? He moved to Miami, to Coral Gables, Miami, $22 million mansion. Now, why do I bring this up? Because a lot of people say that this is distraction and this is things that are going on when he should be driving the company, because they were trying to get scale, they were trying to get scope and footprint in multiple cities, and then profitability. But nonetheless, the founder, Sellin, was covered out there in a lot of news media covering venture that were saying, why did people let him do this? I would want him, maybe get him a couple $1 million, pay some taxes, do some things, get himself a place, put a little money in his pocket. But $100 million, that's like an exit. Nonetheless, they did it, and he went house hunting, and currently is still stuck with Trevor Noah's house that he's been unable to sell for what he paid for it. So if you're looking around, in the Bel Air area, and you can look up Trevor Noah's old house, there's a guy that's willing to sell it. So did I say Frothy Market? So Frothy Market. Well, let's talk about scooters. By July 2022, over $5 billion had been invested in 34 companies around the world. Lime, $935 million, founded in San Francisco. Bird, not only the amount I showed you, the additional amount taken up to 883, Santa Monica. And by the way, this is July 2022. So this is a year and a half ago, because we're sitting here at the very, very beginning of 24 now, which is 18 months after this. Gogoro, Taipei, almost more than $750 million, just over. And then Tier Mobility in Berlin, Germany. Interesting. So there you have it. So all this money has been invested, but so let's find out, how's it doing? Did these scooter companies ever get scope, footprint, scale? Did they ever get profitable? Let's go find out. Turns out when all this was starting on the Frothy Market, there was a VC that was skeptical, and he's one of the leading VCs, Mr. Bill Gurley of Benchmark Capital. And Bill Gurley posted this picture from China. This is a pile of rental bikes in China, and it's the same rental bike company. You can see them, and they find them, and these workers take them and make these ginormous piles because these are rental bikes. So Bill Gurley is like, where are we going to have maybe a pile of scooters one day? He's asking the question. And then he tweets this. Imagine any of the scooter providers calling the police about theft. Police, where did you leave your scooters? I don't know. According to my app, it was right here at the corner a minute ago. See the point? And he was also reacting to this on Reddit. Check this out. Reddit was providing links to people to go buy a kit on eBay for $32. Steal a bird off the street. Easy. Buy a $32 kit on eBay. Easy. Rip out bird's circuit board, replace with what you just bought for $32. You have a free electric scooter, and it no longer talks to the mothership, so the apps can't see where that scooter is anymore. It's your scooter. Isn't that interesting? So Bill Gurley is pointing out, hey, what do you do when the city starts picking up all of your damaged rental scooters and just throwing them in a junkyard pile? What happens to your company? And then what about when they're talking on Reddit on how easy it is to steal the scooter and put a new board in and polish it up, repaint it, give it to your kid for Christmas? I got you a scooter. Thanks, Dad. Well, then Bill Gurley pointed this out in May 2018 because he was pointing out that there are other things that are going to happen with scooters. He said, this is the United States of litigation, said Bill Gurley, a scooter skeptic and an investor in Uber. He was warning about the costs associated with maintenance, insurance, charging, rebalance, depreciation, and the city gathering up those things you're trying to rent and throwing them in a pile because you're basically leaving trash all over the city. Look at that pile, that's China. And so guess who was right? Bill Gurley was right. But Bird still wanted to get out on the stock market and show everybody they could go big. How did it go? 2021, November 5th, Bird is on the New York Stock Exchange at $8 a share. $414 million of cash they made on the IPO, minus the fees to the bank. And the SPAC valued Bird on that date in November of 21 at $2.3 billion. The CEO who had sold some of his stock only had 13% left. But that was worth $325 million at that moment. Wow, everything's great. No, I got a clicker and I'm about to click the button and I'm going to show you things aren't great. He said the funds would fuel growth and further the mission of providing environmentally friendly transportation to everyone. Okay, here we go. First day closed up a bit at $8.40. 3 weeks later, the stock is at $6.17, down 26%. 1 year anniversary of the SPAC. They've made quarterly announcements announcing that they're not making money, announcing that there are lots of expenses for insurance and maintenance. Hey, that's what Bill Gurley said. Announcing there's a lot of challenges with the rounding up scooters that have been stolen or broken or left at the side of the road. Hey, that's what the picture showed that bike rental was happening in China. And so it's trading at 25 cents a share. You believe that? And after the IPO, they went out and actually had to get more money, debt, $300 million of debt. Crazy. 33 million in November, 100 million in May, and 160 million in December of 22. So they went out and got 300 million debt on top of everything. And now they have a stock that is trading down at a nickel, 1 nickel, 5 cents. It's down 99.98% since it went out. So in 2023, the stock market called, says your stock is down so low, we're going to delist you. You can't do this. So they did a 25-to-1 stock split. You see that micro bump right here? Well, it didn't help. It didn't help. And on May 18th, they announced that. That was 1 to 25. So if you owned 100 shares, they sent you a letter that says now you own 4, because we're doing a 25-for-1 reverse split, because they're trying to make the price go up by putting less shares out there. Well, September 22nd, NASDAQ called them and said, stop. Your market cap won't stay above 15 million. You are fired from the stock market, off the New York Stock Exchange, the glittering New York Stock Exchange. And then they went to the OTC, sometimes called as the over-the-counter or OTC or pink sheets. There's a lot of names for it, but it's basically for little tiny stocks with little tiny market caps, hoping someday to come to NASDAQ or New York Stock Exchange again, but living a life over there where the small, super high-risk offers live. Now, they should have seen this coming. There were bumps in the road. San Francisco regulated in 2018 scooters and only issued permits to skip and scoot. Bird and Lime had to work around things, and in September, Bird finally got a permit. So in other words, life wasn't easy because now the cities are reacting. Pedestrians have gotten hurt, pedestrians have sued, pedestrians have reached out to the cities. People have talked about, the scooters on the sidewalk. Shopkeepers talked about, I got 3 dead scooters in front of my shop. What do I do with them? Trash, pick them up, please. July 2019, Milwaukee regulates scooters and actually sued Bird. Get all your bird crap off my streets. Pun, haha. 2020, during COVID, they found we were all locked at home, so why do we have to pay for a scooter and go across town when we're working from home or we're locked at home? And they laid off 40% of their workforce, 406 people out of 1,387 by one report, to be exact. Then, 2020, they had made a thing called, hey, be a fleet owner. Own 25 birds. We'll give you part of the rental. All you got to do is find them, charge them, take care of them, put them back together when they get backed over by a trash truck. There's pictures of that online, by the way, of this horribly tweaked scooter. And the guy at the trash truck looks at the back of it, picks it up, throws it in the back of the truck. And that's that. Boy, trash truck guy, I'm going to get in trouble if they find out we ran over their scooter. See ya. And there they go. So now somebody's sitting there, hey, I'm checking the app. One of my scooters in my rental fleet appears to be going to this landfill at 55 miles an hour. How's that possible? It's in the back of a trash truck, you idiot. That happened. That's what happened. So these fleet owners we're talking about, I didn't make the money you said. It's hard to find them. I got to repair them. It's worse than you thought. And there was one story where a fleet owner carefully identified that after only a few months in business, they were $40,000 in debt. So basically, it's bad business. Well, guess what? The main company was announcing quarterly reports to the stock market. Didn't look like good business either, and it went all the way down to what now is a nickel a share. So February of last year, 2023, about a year ago right now, Washington, D.C. didn't renew their permit. And they're like, sorry, dude. So now it comes to this. Is it over? The current market cap is $7 million. Wait a minute. Trevor Noah's old house that the CEO still owns in Bel Air is worth like 3 times that. That's kind of crazy. The revenue, they said, was 245. Well, that's $250 million in revenue. And in September 22, no surprising, CEO steps down, becomes chairman. They name Shane Torchiana as CEO. June 2023, Travis stens down. That's steps down. Sorry for that. Little fat finger typo. August, Michael Washinushi, CFO, becomes interim CEO. Torchiana steps away, and Travis departs the company. December of 23, electric scooter company Bird files for bankruptcy. No surprise here. In their effort, they raised all that money to get scale, to prove that at some point in time, with enough cities and enough scooters out there, it would be profitable. None of those estimates come through. Those models existed. That's what those big investors were looking at, assuming they got out there. But those ended up being hurricane maps that were wrong. The hurricane didn't go over here. It hit them, it hit the company, and they just never made it for all the reasons we talked about. They pissed off cities. They got sued by Milwaukee. A lot of things going on, but they're still out there and they're still operating. So what are they going to do? They're going to restructure. Is there a path forward? Can they reduce it to enough cities that use these very, very much that they have enough volume sales to make it work? That's what they're trying to figure out in bankruptcy, and all that debt they got, they're trying to mark that down to get agreements from people, maybe to cut the debt in half, to turn it into stock, which is only a nickel, and maybe someday the stock will be up, don't know. But the financials are actually not encouraging. Take a look. 2020, you go from 115 to 241 to $293 million in revenue. This year, through 9 months, it's 132. And then you look at the net loss, 208, 214, 358. The net loss is down to 73. But also what we're understanding is they're operating a shell of themselves. And you can see the money that they spent, 2022. This is why, look at what happened to that stock. I mean, to go from here to here, and you say, well, we're acquiring companies, we had some things. It's not scaling, and there's not a story in there that was working. And there's good people, that were trying to make it work. I mean, the people that are there are not dumb people. These are smart people. They're just trying to make this work, and it didn't. And it's not coming out in the numbers at all. So what are the lessons for you and me? Now that we can see that Bird has gone here. And in bankruptcy, you know, they say they're going to try and, flip the company back to profitability. Well, I don't know. I don't think the best people out there are going to be able to flip this bird. And I think it's probably just heading for disaster. So here's something that I want you to think about. When you see these stories, you see all this stuff, remember one thing for your company, whether you're running a t-shirt company in Berlin or a technology company in California, solid financials always win. Sometimes it takes a while, but solid financials will win. You got to be profitable on each transaction. If you sell toys, what did it cost you to make? What does it cost you to ship? What marketing was in there? Did you make $1 selling that toy? And that's called unitary transaction. Do you make a profit on each unit you sell? Oh, we'll sell 100,000 of them and someday we'll put ads on the website and we'll do that. No, the eyeball models were out there. They didn't work either. Ad rates go down. That disappears. Solid financials always win. And this is a cautionary tale that you may read about VCs and VC money, how it travels in herds. And that's true, it does. But frothy markets sometimes are about having a play. Let me explain that. This is for you and me, this is more of a curious, maybe education point about venture capital. If there's a really buzzy market, frothy market, like a bunch of VCs are interested in scooters, except Benchmark and Bill Gurley, that is. So you have them out there, everybody wants a play, everybody wants to get in. So much so that somebody was willing to buy shares from Travis and give him $100 million to get part of his ownership. Remember that? Because when it went public, he only owned 13% of the company. He was down to that. Frothy market's sometimes about having a play. All the people that give their money to venture capitalists to build the fund, hey, scooters are hot. Do we have a play in scooters? Yes, we do. We're in Lime. We're in Bird. We have a play. And so that, they push it. So sometimes the frothy markets, that's what that's about. And then lastly, know where your investment is going. If you're part of what we call friends and family, even putting $50,000, $25,000 into a convertible note or something, know where your investment is going. Because if there's any employee sell-in, that usually will reduce motivation. If your nephew says, I got a great idea, I put $50,000 into it, I'm trying to raise 100 grand, what are you gonna do with it? Well, first I'm gonna pay off $13,000 on a credit card. Wait, whose credit card is that? What's up with that? Wait, what is that? Know where your money is going. If your money is going to the founder in any way, and founders should be taking next to no salary, just enough to get healthcare benefits, they should be all in. Know where your investment is going. Ask about use of funds. You would be surprised how much sometimes goes to founders, even in early stage, to pay off debt. Now, if that's a loan that was taken to get the company to here, and all the investors know that $1 million coming in from 20 people, but 100,000 is going out to pay that debt, that's normal and natural. But if it's going to just help out a founder or something, you better know exactly where it's going, because being a startup is not an opportunity to get your student loans paid. It's an opportunity to drive forward and make something into a success. Whoops, one more. And on the other hand, a small sell-in is understood, but it's got to be short of somebody being able to buy Trevor Noah's $20 million house, $25 million house. And that is a lesson for you and me. So this has been, I think, a very interesting case study on how there is a lot of momentum and a lot of companies, a lot of players in a market, but nothing is proved to be scalable, profitable, growing company going forward. They've launched in more cities. They've put more scooters out there. A lot of people like you and me have benefited, been able to use those scooters. But has there been a great, growing, scalable, profitable, enduring company for the future? We haven't seen one yet. But we've seen a ton of venture capital money and public SPAC money and debt go through the shredder trying to make it happen. That's the story of Bird. I hope I left you better than I found you.